The greatest challenge of traders is ability to make the right entry and at the right time. In this video, I'll be sharing with you exactly how you can make your sniper entry when using the candlestick formation. The type of candlestick formation we are referring to is the bullish engulfing candle and the bearish engulfing candle, as well as the bullish pin bar and the bearish pin bar. If you are wondering what is a pin bar, in this scenario, here is a typical pin bar. This candle is a typical pin bar. So this is a pin bar candlestick formation. What made this candle a pin bar? If you observe carefully, this bullish pin bar, you can see the body of the candle here. The wick is 3 times more than the body of this candle. So this is what validates this. The wick must be 2 times or more the body. So that is what validates it. If you look at this one, this is a bearish pin bar because this wick is almost 2 times of this body. And then here again, you can see that this is a pin bar, this particular candle. So that is how simply you can define a pin bar candlestick formation. Now, and then secondly, this particular candle that you are seeing here, this is an engulfing candlestick pattern because the body of this bullish candle, this green one you are seeing, totally covers this previous candle. So because of this covering, we now call this a bearish engulfing, a bullish engulfing candle. And then look at this pin bar here. Now I'm referring to this particular pin bar. Looking at that candle, that is a typical bearish pin bar. Now you are wondering, why is this candle a bearish pin bar? When it comes to the ideology of a candlestick, what we are concerned about and focus on is not the color of the candlestick, but the psychology behind its formation, which means that you should be able to interpret this candle correctly. What that implies is that at the time, buyers were fully in control of this market. Then sellers came in and pushed it all the way down. So this week now shows failure on the part of the buyers, their inability to take price to the upside, and then shows strength of the buyer, of the sellers, the way the candle closed. And then you can see that afterward, despite every attempt to take price back to the upside, buyers couldn't close price above this point. Hence, price continued to drop to the downside. So this is a typical illustration of how you can understand what each of these candlesticks represent. Now, these candlesticks are not traded in isolation. When I say they are not traded in isolation, it simply means that for you to trade this candlesticks pattern, it must be in a particular zone, not just an area. It must be in a zone, not anywhere. For instance, if we look in here, that is a bearish pin bar. Now, because you saw this bearish pin bar, imagine if you now sell. After this is a bearish pin bar, I will now sell immediately after this particular bearish pin bar. So if you have sold, you would have obviously be in a loss, because the next bullish candle that follow push to the upside, which is this one. So that is to say that for you to implement this type of candlestick formation, it must be in a particular zones. And this zone we are referring to it can be your area of resistance. For instance, this is a resistance zone. You can see that. And again, if you look at this point, this is a support zone. So when you have this formation, price left here, price came here, price left here, price went here, it left, it came back to this zone, retest it another time, went back here for the third time, retest it, and now it is coming to the downside. So these are zones. So if this price now come into this zone and gave us a bullish engulfing candle, we will now be looking forward opportunity to buy again up to this zone. So our trading decisions are based on zones to zone. We now activate this candlestick formation when price come to any of these zones. So we are not trading it in isolation. We wait for price to come to the zones. Once price are in these zones, we now make our trading decision. For instance, this is the first zone. You don't have entry, but when price left to this point, you will now begin to look forward a confirmation entry. So in this particular scenario, these two bearish candle are joined as one bearish candle. The question is why. You realize that when this particular one end here, this end, the next candle that follows open without a wick. This particular one do not have a wick. When this one close, there is no wick. So this is what? This is a king order block. So because this is a king order block, we are now expecting price to come in. So price came in, right? Gave all this pin bar, and then that is why you see price dropping. And when price came into this zone, gave us an engulfing candle, you see that it bought from here into this zone. Having said that, how then do we make entry using all of this candle pattern? Because our goal is to have to make sniper entry using this candle formation. The fact that this candle form here alone is not enough to define that we have a sniper entry. So look at what will happen. There are three ways you can trade the candle pattern. First of it is, like in this scenario, immediately you have this engulfing candle and the candle close, you will buy from this zone. You will buy here. Do you see that? So which means that when we are to have this, we can buy from here. So this would have been our buy entry. Our stop loss would have been here, which is okay and perfectly well. So another way to do this is for you to wait for price to pull back to 50% of that previous candle, which means that if we are considering this candle, we'll wait for price to pull to 50% of it. And once price pull to 50%, which is half of it, you can now make your entry. For example, look at this particular one. So what happened in this scenario of this one? You can see the price, when this will have this pattern close, you can see that the next candle price pull back all the way to this point. You can see that price pull back to half of it. Then you now sell from here, and then price is now falling to the downside. So the 50% play is another entry. Look at this bearish candle. Look at what happened. This price pulled back to 50% of this bearish candle. Can you see where this candle formed? Price closed here, but price still went inside before it started coming down. So that is the law of the 50%. So you can wait for price to pull back to 50% of that candle before you make your entry. Okay, And another instance is that price can retest 100%. Then means that you need to wait. Like in this scenario, this is the pin bar. Look at what happened. After this one, this price pull back all the way to the end of this previous one, 100% of it. Then you now buy from there and it continues. So 3 ways you can make your entry: either at the close of the candle, 50% of the previous candle, or complete 100% pullback of the previous candle. So these are the exact way that you can make your entry when applying this particular strategy. And I believe this has brought clarity to your trading and that you have learned something new. This is crash. This is volatility 75. And of course, remember we say we begin to consider these things around the zone. So here now, this is a typical resistance zone, right? And this resistance zone coincides with our 200 moving average. So when price here, we are looking for an entry to sell. Okay, so in that case, let us see if we have these criteria that are met. So here, look at what happened. We have this pin bar. Okay, so you can make your entry here, or look at this scenario. If you are using this pin bar, look at what happened. Price does what? Price pull back a little into it before price begin to sell to the downside. So this is how exactly you can take advantage of this, and I believe you have learned something new. Do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. See you in the subsequent video.